What is going on, everybody? Happy Saturday, man. Happy Saturday. Welcome on in, man. Oh, man. It's a beautiful day. It's a beautiful morning with sunshine everywhere. Welcome in, guys. Let's let the stream fill on up, man. Let's let the stream fill on up. Welcome in, guys. Welcome in. Glad to have you guys here. Happy Saturday. You guys know I like to do this stuff on Saturdays, educational Saturdays, presented by Tostitos, the chip company. I'm glad to have you guys here, man. What's up, everybody? How you guys doing? So, today, we're going to go over what we did on Friday, how we were able to catch that 170-point beautiful breaker setup. And then we're also going to go over how this trade setup also materialized later in the session for actually an insane move. I think this thing ended up going about 500 points. I did not catch that move because it was already done on that first leg. But yeah, Friday was a really good day for the unicorn, man. The unicorn has been popping off. The unicorn has been popping off. So let's just actually break down why I like this trade setup so much. All right. Let's let the stream fill up a little bit. Let me say hello to everybody. Thando, what's up, man? Tiffany, how are you? Vernon, how are you? Welcome on in, guys. Trey, NYC, what's up, man? Welcome in. Welcome back, everybody. Rosie, welcome in. How are you? Jamel, good morning. I'm not going to say the word, man. I'm not going to say the word. OCO, how are you? Tiffany, how are you? It was so awesome to finish Friday with a big win. Yeah, we had a great day, man. We had a great day. This is my alt account, man. I have one of my traders, one of my students. He's actually an editor for me, so he does a bunch of editing on this account. But I go live over here because TikTok has basically put like 2-3 strikes on my main account. So I got to do it on this account to avoid the possibility of the other account having issues. So we're doing it here. We're doing it live. Yo, dog, what's up, man? Experiment, what's up, baby? Ryan, good morning. Good morning. Good morning from North Carolina, man. Will Trades in the house. There he is, the man, the myth, the legend that runs this account. Good morning. I'm not saying it, bro. I'm not saying the word. I'm not saying the word. Am I a full-time day trader? Yeah, I'm a full-time day trader. I don't do anything else besides trade. No, nothing else. I have other businesses, but this is my job. RTX, what's up, baby? How are you? I get the first trade that was Confluence for the second trade. So let's break down. We're gonna go over just unicorns because honestly, we're gonna go over this setup. Oh my god. We're gonna go over this setup. I swear, bro. I swear. If it happens, chat, I'll lose my mind. We'll know. We will know for sure that that's the trigger. We'll know for sure if that's the trigger. If in the next couple minutes you see black. Oh my god, I'm dying. I did not even think about it, man. See, it just rolls off the tongue, bro. All right. So, guys, we are looking at the very rare breaker setup. You guys know what it is, okay? It's a very rare breaker setup. I can't say the word. Now, let's talk about what we were looking for on the higher time frame, and then we'll talk about breaking this down on the 1 minute. So if we hop on like the 15-minute real quick, we can see that price was trading inside of this wedge pattern here, right? Okay, we're in this wedge area here. If I bring price back Okay. And I delete all this stuff, right? And we're looking at actual, like what we were seeing in the morning session. All right. We had relative equal lows built up down here. This is now 10 in the morning on Friday. We had relative equal lows built up down here. But as you can see, this is what I call an area that you do not want to get involved trading with. This is just a low probability area of trading. The reason I say this, and this is going to really this is going to help you guys. If you're trading inside of this area here, you are dumb money trading. What you need to be waiting for is either a sweep of a London high or a sweep of a London low in this situation, which is exactly what we did. We waited for a London low to get swept and then found a reversal model that's, part of our strategy, right? So it's the animal of the Scots. Okay. We're not talking about it, dude. We're not talking about it. We can't risk it. So what I want you guys to understand today, man, because I think a lot of you get chopped up in this area here, man. This is the area that I've seen from people that I'm working with. I've seen from the mentorship students. They say to me, hey, PJ, if I wasn't with you on Friday trading, I would have been trading this area of chop. Okay. And yeah, you could have made money, but you're going to get chopped up, man. It's a low probability zone. All right. So as we have marked out here, guys, we have relative equal lows, London lows, and more sell side below it. Okay. So we're looking and waiting for a liquidity sweep. So let's just replay price. As you can see, boom. The 15-minute candle comes down and we take London lows. Now it's appropriate for you guys to start hunting. Okay. We're inside a kill zone. It's hunting hours. We need to now look for a setup. Okay. Somebody said, how do you determine the current trend? Higher time frames are going to give you the overall trend. The current trend is going to be based on basically what we're doing out inside of these liquidity points. Like if I'm sweeping a London low and we're getting a nice reaction out of it, we can start looking for setups higher into these liquidity pools, right? I am not over analyzing the market in a way where I'm saying, hey, what's my daily bias? What way is the market going to go overall today? I'm just looking to get in the market off of my liquidity pools and trade off of those zones with my models. It's not really an overcomplicated model. You just need to have patience with it. Okay. So I'm not sitting here saying the directional buy, like honestly, this is a counter trend trade. If I'm being honest, the 4-hour time frame, right, is way down. Like we are trending lower still. Now, this current 4-hour structure looks very bullish from that 2,000 point breakout the other day. Okay. But what I like about this, guys, and I got so much stuff on the charts here. Let me clean this up a little bit for you. What I like about this, right, why I was looking for higher. So let me just explain why I'm determining the trend. This is a very, very, very key point. You see how we created this massive 4-hour fair value gap here that I have marked in yellow? Let's think about this logically. If we were to be looking for shorts, right, it's going to be a very hard time for price to want to flip this gap because there's a lot of high resistance liquidity resting in here, right? So I would rather wait for this market to give me a signal to bounce out of here to go higher, right? It respected the 4-hour. It's a high resistance liquidity run here. I'm favoring the long side of the market because of that, right? So the higher time frame 4-hour right now, it just pulled back into a gap. It tapped into an old 1-hour inverted BPR, which is right here. See how this was an inversion gap here? A 1-hour inversion gap. Overlapping with this gap is a BPR. So you get a nice touch and it respects it and it moves higher off of it. So that's your higher time frame idea, okay? We're respecting 4-hour and 1-hour PD arrays, right? Come back down to the 15, okay? We've just swept London low now. Okay, now we're getting interested. We swept London low. Let's hop on to the 1 minute now. Okay, this is where things are key elements here, right? We take relative equals, we take London, and we put in a low down here. Okay, we put in this nice low. We're not looking to do anything until this low actually gets swept again. All right, you guys understand this part? This part's really, really, it's important to understand this because a lot of people get stuck on this and then they get stopped here. You want to wait for that low to get swept again, right? This is why I always say this is that money sweep. Okay, so here we go. Boom, money sweep. Okay, there's your sweep. Now that's what liquidity sweep looks like. That's what manipulation looks like. Boom, V shape now. Okay, now things are starting to get interesting. Now remember what I said about the higher time frames, right? We're respecting the 4 hour, we're respecting the 1 hour. Okay, we just moved 2,000 points to the upside off that news, that Trump news. Now we're looking to see if we can bounce out of it. No, that's not turtle soup. Turtle soup. We're not turtle souping this. We're not even entering this yet. If you want to enter here, sure, you can call it a turtle soup, but that is a very, very low confluence trade. I would not recommend anybody trades turtle soup. What you're basically saying in a turtle soup idea is that you're going to take a long here, okay, with a stop here. But in my model, we don't have in the breaker model, we don't have the change in the state of delivery yet. Okay? So there's really no confirmation for me to take this yet until we get that change in the state of delivery. So let's continue. There is the change in the state. If you blinked, you missed it. It's right here. Okay? The breaker model consists... Okay, bro, what is going on here? I'm getting so much spam right now. Hold on. I get so much stupid spam from okay, never mind. Okay, so the breaker model consists of 4 things, guys. Very simple. Man, this is pattern recognition. Pattern recognition. 1, low, high, lower low, higher high. Okay? Now, in this model, we use the 2 highest up close candles in this example, the bodies of the candles, okay? And we draw it out in time. That's going to be your breaker block. Now, we know this is a rare breaker, right, guys? This is I can't say the word, but here it is. Because there's a fair value gap resting inside, okay? Because that fair value gap is resting inside of the breaker. Now, we're getting a very nice V shape. We sweep liquidity, V shape. Change in the state of delivery happens here. Let's mark that out so you guys understand. Change in the state of delivery happens here. CISD, mark it out. If I can mark it out, that'd be fantastic. Okay. There's your CISD. Now, how do we trade it, guys? How do we say it? How do we trade it? There's 2 ways, right? Who's been paying attention? Give me option number 1. Somebody said flip a coin. Well, let me tell you something about coin flipping. You have a 50-50 shot. With this, it's higher. Okay, so we are waiting for a retrace either into the breaker or into the FVG. Now, I'm going to write this out because this is the part that people get very confused. Okay. Option 1, retest breaker. Option 2, fair value gap touch. I'm going to give you the pros and cons of both. Everybody always asks me, Paul, why do you do it this way sometimes and why do you do it the other way sometimes? Okay, here's going to be, this is a great example because you're going to see what happens later. Option number 1 is going to be the retest of the breaker. There's the retest. There's the explosion to the upside. There's the retest. We're in the market here. Okay? Stop's going to be below the breaker. And in this situation, we're going to always be targeting a 1 to 2. Let me move this out of the way. We're always going to be targeting at minimum a 1 to 2. Okay? That's all you need is a 1 to 2 here. Everyone understands this part, right? Okay, so there's the retest of the breaker. Okay? That's going to be your option number 1. Okay? Now, this is the cons of this option. The cons of this option is this market pulls back deeper into this, and you're going to be running a little bit wider of a stop. That's going to be the cons. The pros are going to be that if this market never comes deeper and retests the breaker, watch what happens. You will never get filled down here. Option number 2, you will not be getting filled on this setup. So it's up to the trader to make that decision. Do I take the breaker or do I take the FVG? Okay. It's going to happen like that too. You're going to have days where the breaker gets retested and it goes, and the fair value gap never gets filled. And there's going to be days where the fair value gap gets filled and goes. Okay. But watch what happens on this day. This is an interesting day. There it is. Boom. This is the exact trade we took on Friday. And then it exploded even higher from here. I believe we TP'd at about 100 and yeah, right around here. That was our position on Friday, and we were done. Very clean breaker model. Didn't even need the FVG to be tagged. Boom. Beautiful trade, right? And it exploded to the upside very aggressively. Now, the reason that we also like this too, guys, you have to understand this part too. The higher we had draws on liquidity here, here, and here, and London high, which was the overall draw on liquidity. London high was the overall draw on liquidity for later in the session. This is where this part is pretty cool, because we had people messaging me in the premium that day. And they're like, yo, the breaker is going to get retested again inside of the FVG. And I'm like, wow, that's very interesting. You know, we were already done. I'm not really interested in the market anymore after I trade like that. And then watch what happens later in the session, guys. I love when people say this stuff is random. Watch this. What is this filling? What is that filling right there, chat? Yep. That old FVG from 10:30 gets filled at 11:20, almost an hour later. Okay? And then watch what happens from here. Now, if you were taking this setup here, guys, if you were taking this idea here, where let me see who's paying attention here. There's a really obvious draw on liquidity for the second model. Where is this draw on liquidity for here on the second model here, on the second entry? It's very obvious. You see this wick high here? This wick high was from Fed Williams coming in and saying that he thinks the market, the inflation, I believe, is not going to cool. He said something along those lines, something stupid. Caused the market to have a knee-jerk reaction and go lower. And then the market's like, nah, I don't believe you. Now your target is going to be that data wick high. Data wick high. It's so obvious at this point. We're engineering highs now. This is when things need to start. You guys got to start clicking this stuff together. This is now a data engineered high. Relatively equal. Okay? That's your draw. That's your final TP. And the market explodes through that. That's the beauty of this model, guys. Especially when you have a draw on liquidity and things are easy to see that, hey, this market is now going to start drawing towards that. What did I say earlier, guys? The overall high. Because this is the major liquidity pool. Think about it, guys. Very simple. We're moving from internal liquidity down here, 4-hour gap. Remember this, 1-hour gap. Okay. Internal to external. Internal to external. That's how the market works. So when you're able to put that stuff together, it's going to give you guidance, because the stuff and the feedback that I get from students is people have no idea where their trade is going. We know, okay, from experience, I've been doing this 9 years. We know that when we engineer a data wick high and I have a London high resting above it, we can start looking for a long into that area, because we know there's a lot of liquidity resting there. Okay. And then obviously the overall draw on liquidity. Watch what happens later in the session. London highs get tagged. Well, I believe they get tagged, or did they just get teased? Oh, yeah, there's the tag right there. There's London highs getting tagged at the end of the session, and boom, you're done. So you guys, we're moving from London low internal to external London high. We're moving from internal liquidity, which is this 4-hour gap. Remember, guys, we're in a 4-hour gap here, dude. You guys got to remember this part. We're in a 4-hour gap. We're delivering from internal liquidity to this external point here. Okay? That is going to really start to make things a lot easier for you guys, because if you're not understanding this part of the concept of where draws on liquidity are and how I get my targets, everything is going to be a blur. It's not going to make sense. The patterns aren't going to make sense. Where the trade is going, you won't understand it. You got to know where your draws on liquidity are, and that makes everything a lot easier. Guys, also, I do want to mention real quick, I want to plug out my Discord channel. We have a free Discord community, man. We've got one of the best and fastest growing Discord communities in the entire trading world. Make sure you join that community. We just had a giveaway yesterday for 50K. Let me not talk about it, but we just had a giveaway yesterday. Somebody won a big giveaway. We do that stuff all the time for free people. Education, trade reviews, analysis. You get so much stuff. We've got a great community. I would love for you guys to join it and hang out there and see what it's all about. With that being said, does anybody want to hop on and ask any questions? I think we should do some Q&A with actual viewers today. So I just saw someone that wanted to request. I have no problem bringing you on to the stream, and we could get some live Q&A in. Does anybody want to hop on and request? Let me know. Let me know. Does anybody want to request? Do I have what are the requests out here? Okay, somebody can request. I don't know how to do it. I'm not sure how to. Someone wants to. There you go. Let me bring this guy in real quick. Hello.
What's up, brother?
Hey, how are you, man? What's your name?
My name's Adam.
Adam, nice to meet you, brother. What kind of questions you got, or what are you thinking about?
Man, it's just like I fully understand the model. I fully understand like everything goes into it. It's just the ability to like recognize it in real time, kind of thing.
Yeah, the real time pattern recognition just takes a lot of practice, to be honest with you. When I started learning this in the beginning, I really felt the same. I was like, how, like, I could do this on back testing, but it becomes a lot harder in real time. And what really helped me, man, is I started watching someone like myself. I had a mentor. I started watching him do it every day. Yeah. And when you watch somebody after a lot of hours, you're going to start to understand it and see it earlier. But I mean, what I do now is I pre-mark out everything that I think was eventually going to happen. So like, for example, if you're watching the stream, like if I brought back price here and I deleted all this stuff, right? I'm kind of predetermining in my head that this is going to end up being a breaker, right? I'm actually thinking that this is going to end up flipping this high here. So you should start thinking in real time, hey, if this flips this high, I can now mark this out as a breaker, right, in real time. Because if you're not doing that, then yeah, it's going to be kind of difficult to actually in real time understand like, hey, like this is forming for a breaker. So I'll have this marked,
Yeah.
and I know in real time, hey, if we flip this high right here, boom, that this is now a breaker setup. It's just
Yeah.
gonna take repetition and honestly hours and hours of chart time. How long have you been learning the
Yeah.
models for?
Uh, about I started training about a year ago, and about 6 months ago, I started training like ICT stuff,
Okay.
and yeah, I was in a funded for like a month, um, and but I was just like going up and down. Like I would have like a winning day, and then I'd lose it, and then I eventually ended up blowing it actually like 2 days ago. But
How's your risk management been? Was it just consistent losing streaks, or was it like big losing days?
nah, so basically like with those 2 days where it was like 8% swings, um, I got a bit ahead of myself. The first day I took that crazy like fake pump off the news that Trump was thinking about tariffs or thinking about pausing tariffs before he actually announced that he was pausing tariffs.
Yeah,
I don't know if you remember that like crazy like pump and then dump.
I remember it. Yep.
Yeah, so I caught a bunch of good moves there, and then I was kind of flying high, and then the next day I remember I was just sizing way too big, and like it was crazy because like I'd have like a 20-point stop on like one micro, and that was like fucking like $300, you know what I mean? So I kind of
Yeah.
just got caught up in all that, and then yeah, I just kind of got pissed, and it was like because I was already down like 1,000 on the funded, my max loss is already like 1,500, so I was like, okay, like I either like grind this out, try and get back, and I was
Or
just like, yo, I'm just gonna
YOLO it.
take a trade here and see if I
Yeah.
can get even or blow it. So I, obviously blew it, but
Well, listen, I'll say this, man. Blowing accounts is part of the prop firm trading business. Like that's going to
yeah,
happen. Like I just
yeah,
always will say, hey, like that's part of the business tax. That's part of the business expense.
yeah,
That's going to happen, but it shouldn't define who you are as a trader.
yeah, no,
Um,
for
what
sure.
I recommend is depending on what platform you're using is make sure you have like a max daily loss. That way you
Yeah,
can't go beyond that, right? Because you shouldn't be
yeah,
blowing the account in one day. It should be
yeah,
like rule of thumb should be 250 to 400, 500, depending on your risk like tolerance. That's how much you should be able to like lose in one day, and then you can't trade anymore.
yeah. So that was actually so I kind of like I was kind of playing with house money getting because that was my first evaluation I've ever done, and I ended up getting into a funded. So I was pretty fired up about that, and now like that was me just kind of trading like willy nilly kind of thing. But now I'm gonna do it like only taking one trade a day, like waiting for the setup to set us there. If the setup's not there, like you know what I mean. I'm just gonna be way more like I have it on my top step where it's only gonna allow me one trade a day with 500 max risk and
Yeah.
1,000 profit target. So we'll see how that goes. But um, another question I got here. So how do you kind of like so the first sweep of London lows, right?
Mm-hmm.
And then there's that second sweep. Like, are you always waiting for that second sweep, or
Yeah.
how do you kind of?
That second sweep needs to happen because then that's not gonna for a breaker setup, right? Then it won't actually have the four key components, and we'll have that low, the high, the lower low, and the higher
Oh yeah,
high. So you got to think of it like this: if we put in a low, okay, it's usually pretty rare that you just see a reversal off one sweep like this. You
yeah,
usually have that next manipulation leg sweep, which is what you want to wait for, and then the V shape.
yeah. Because if you look at it on the 5 minute, I'm pretty sure it just looks like one sweep.
Yeah, it would just be one on the 5.
Yeah, yeah. So that's what I've been kind of
Well,
thinking about.
actually,
Is just,
no. Actually, no. There is a sweep
I
here.
guess, yeah,
There's
yeah.
a
There
sweep.
is two. Yeah, yeah. But I've been kind of just moving towards higher time frame stuff to avoid like getting faked out. Because like on the 1 minute, like what I'm saying. But like, how would you kind of like what would you suggest for that?
So I'm always you have to always be aware of what the higher time frame is doing in your current in the areas that you're trading. Like if you're like, for example, I was just explaining this. If we're delivering out of a higher time frame gap like we are here, right? We've came back and here's your Trump missile that you're talking about, and then here's
Yeah,
your pullback into this 4-hour gap here. Okay.
yeah,
Now we're inside of an area that I call high resistance liquidity. Okay, it's going to be a lot harder for me to want to short this area than it is longing, because it's going to be very difficult for this to flip because there's so much resistance in here now. So you got to be aware of where you are. If you're inside of a gap, if you're in a 15-minute gap, 30-minute gap, 1 hour, whatever it may be, you got to use that in confluence with your trading setups, because that's gonna determine where the market goes. Like, a lot of people say, I'll use this gap for guidance. Like, look, I'm showing you right here. Like, here's a 5-minute gap, right? There's traders out there that are going to say, hey, this is a 5-minute fair value gap. Okay. If this rejects here, I might look for lower. But if we flip it, I'm starting to look for higher. So you got to have some of these gaps. You got to have all the gaps drawn out. That's my recommendation. And know where you're delivering out of. Like, just knowing that we're in a 4-hour gap down here and we just swept London low, would you really want to be looking for a short here? You know what I'm saying? Like, we just took a major liquidity pool. We're inside of a higher time frame PD array, which is also a 4-hour and a 1-hour PD array inside of each other. This is what you want to. This is why you want to build that higher time frame alignment and then look for your lower time frame entries. That's what I always do. Like, I'm always entering on the 1 minute.
Yeah. I remember Friday. I knew we were in that 4-hour fair value gap, and it looked like we want to push higher. I remember there were data highs from like PPI at 8:30. That I wanted it to grab and maybe, react off them, but I just got in way too early. I didn't wait for the sweep of the London lows, which is where I messed up. But
yeah, man. Well, just keep grinding, get that risk management locked in, and work on that psychology too, because honestly, taking L's is part of the game. You got to be the best loser you could possibly be. I recommend reading that book by Tom Hogarth, The Best Loser Wins. Literally, that's trading. If you could be a good loser, you will make money. But it was nice meeting you, bro. I'm gonna bring some other people on, and best of luck.
Yeah, for sure, brother. Thanks for the time.
See you, man.
Bye.
Hey, what's up, man? Hello.
Hey, what's up, man?
Hello. Okay. You disconnected? All right. Who's next here? We got Primal Mover. Let's get him in. Primal.
What's up, brother?
Primal. What's up? How are you?
Good, man. How are you?
I'm doing very well, man. Doing very well. How's your day going?
I am honored to be speaking to you, man. I am honored to be speaking to you. You are a damn good trader.
I am honored to have you here on the stream, man.
The free insight that you give out here.
Oh, man, I appreciate that. Thank you. Do you have any questions? What's going on with your trading, stuff like that?
We trade very much alike. I like to look for my displacement, change of state delivery, retest, continuation. I'm a high risk trader. Like, I have a high risk tolerance. I've passed a bunch of fundeds. I've gotten a few payouts, but I'm trying to take myself to the next level where I'm not blowing these accounts and I'm not having that FOMO still. I've been trading live for 2 years. I studied for 2 years before that. But I'm a full-time day trader. I have some money saved up. I have some investments, and I quit my job to take care of my son.
Oh, nice,
I
man.
went to a daycare. So
that's awesome.
My partner has a really good job. So with money I have saved, the money she brings in, it's working out. But yeah, I'm just trying to get my psychology correct to the point where I know I can make all these returns. I've given so much money back to the market, and I'm just sick of it. And I just need help. Or
let me ask
maybe some insight.
Yeah. Let me ask you a question. What'd you say your name was again?
Tino, Tino.
Tino. Oh, like Tino Martinez.
Yeah, like that.
Yeah, sorry, he's a Yankee legend. Sorry, I'm a New Yorker. So Tino.
Boston.
Oh, okay. So Tino, let me ask you this: the first thing that stuck out to me when you got on here, the first thing that kind of like made me a little bit scared is you said you have a high risk tolerance. What does that mean exactly? Are you trading a personal capital? Or are you trading props, or what'd you say you were doing?
No, I'm trading props. But I'm not scared to see big numbers. I can manage my risk.
Okay, so that's my question.
I
Are you
I
just
don't
like,
mind.
are you over leveraging and like losing big trades, and this is why you're blowing up a lot though? Because the
Sometimes I think so. I think that's what happens because I mean I don't. I'm truly getting my own way. It's definitely me, 1,000%.
okay,
Because
so
when I'm following my rules,
this
everything's
is
smooth.
this is what I would recommend, because I know some guys like you that are like, hey, like I like to take chances on props, and that's completely normal, completely fine. You should try to take a chance here and there to get, make a big trade. That's just part of trading. But what I would do is I would have other accounts on the side that are your more conservative trading accounts, the ones that you're getting consistent payouts from. All right, you're not just hammering multiple minis trying to catch a large trade. I have some accounts that I will literally just try to take aggressive trades on, and then my other accounts where I will only be trading micros on those to get consistent payouts weekly, every 2 weeks, etc. So
Okay.
I would the best traders that are able to farm these props, and the ones that have do the most amount of money, they're not hitting home runs. They're literally just hitting consistent base hits, adding up until their buffers are so high that they're able to pull out money every couple days, right? Depending on what prop you're using. So I would just take a step back a little bit and just try to go slower, hit the consistent base hits, because man, if you're stacking 10, 15, 20 accounts and you're making $300-400 a trade, you don't really need any more money than that. That's like insane money. So I would just try to take a step back from that, slow it down a little bit, have accounts that are maybe higher risk for you, and then have your consistent base hit accounts. That's how I would manage that.
Okay. What would you say? I actually just I've been max allocated with Top Step for on and off for like the last few weeks,
Uh,
few months. I just finished getting max allocated with all 150Ks. I had one that I've had since February that I had really big buffer on, and I've just been trading that one super slow and just taking appropriate trades on it. They increase my profit target before they take me live, so I've kind of just been trying to milk that account
yeah.
and allow it to stay there before they try and yank me up. I want to copy trade the other four. What do you think about that?
Um. So I'm a big advocate in copy trading. Number one, I definitely, I think it's the best way to maximize your profits. But I don't like copy trading every single firm. I'm not one of those guys. I'll rotate. So you're fine to do those 4 copy trades on one firm, but that's why I'm telling you, you should probably have backup firms and backup accounts, so you can then go 1 week on TopStep, 1 week on TPT, 1 week on My Fund of Futures. Like I rotate them. It's like a rotating, like, Ferris
With
wheel.
those two right there, you like two?
What?
My Fund of Futures and TPT.
Oh yeah, I mean those are I'm just naming some of the best firms. Those are probably all like top 5 firms right now. TopStep's in there, My Fund of Futures, TPT, Tradeify, My Fund of Futures. Like you can't go wrong with any of those. But I would just rotate. That's what I do. That mitigates the risk. And let's say, like, some of these guys that have copy traded all the accounts at once, if you have one losing day, bro, you lose on every single account. That to me
Yeah.
is not going to get you consistent payouts. It's going to cause problems in the long term. So, that's how I structure my business, and everyone's different, but that's what I would recommend, man.
Yeah, and exactly. You said it. You said it perfectly, guys. That's how I structure my business. I'm starting to shift my mindset on because I know I can do this. I'm just trying to push it to the max, maybe a little too quickly. But I have a full grasp on this. I have my entry model. I have continuation entries. I have multiple different skill sets that I can use if price is correct. The only thing I'm really working on now is my patience. I need to wait for that sweep of liquidity. Sometimes I get in a little too soon, and then I have to hold in some drawdown because I know what price is doing. But on those off times that it's not, I'm not correct, and she wants to pull back a little bit more out of my higher time frame POI, or she's just reaching a little deeper in this time, that's when I get cooked, and that's where I find myself tilting. It's
Yeah.
really just those little situations. But other than that, I love trading, and I just love what you're doing. You're doing so great, man. I love the stuff you do. I
I
wish people.
appreciate it. I appreciate it, man. I've been doing trading for 9 years, and a lot of the stuff that you just said there, I dealt with myself. Um, and what really kind of woke me up was exactly what you've been saying, is that it's yourself that you're fighting, and
Right.
that you know a model, the strategy works, but it's yourself that you keep fighting. You have to get to a point, man, when you're like, I'm sick of doing this, like against myself. You're working against yourself right now, basically. And what you need to end up doing is slowing down, taking, like, when I started making the most amount of money is when I started doing the least. Does that make sense?
Yeah, I hear that a lot,
The
and I
more
can see it too.
the more you do, I promise you, the more money you will lose. And I try to tell this to everybody that I trade with, because people want me trading every single day. And I'm like, guys, we don't need to trade every day to make a lot of money. Okay. You
Yeah.
need to just take high probability trade setups, lower your risk down, especially in this environment, bro. No, I mean, dude, 1 to 2 minis right now I mean, micros right now, you will crush. But if you trade 1 to 2 minis, you are going to blow up quickly. So,
Yeah. And that's what's been happening to me. I think I've got caught a couple times, just wrong in the moment. My draw is correct, but I did not anticipate the little pullback, and she pulls back hard and fast.
yeah, oh yeah,
It's
hard
almost
and
like she
fast,
knows you're
bro.
over leveraged.
Oh, she
She knows you're
knows.
over leveraged, and she's like,
She,
"All right, see you later, buddy. Thank you."
she knows, man. She knows. Well, my man, good luck. Best of luck with everything. Hope I answer some of your questions, and I appreciate all the kind words, bro.
I appreciate you. Thank you so much, and you definitely did. I'll be in the chat all the time, man. So
Thank you,
keep
man.
up the good work. Thank you so much.
Have a great day.
You too.
All right, who we bringing on next here? Let's bring on Cody. Cody, how are you?
I'm good. How are you?
I'm doing well, man. What's going on?
Okay, so I'm a complete novice when it comes to trading, and I'm just starting my journey, and I'm looking around for mentorships, and I saw yours is sold out. Is Are you looking to take on any clients in the near future, or is there any,
So
other people you can recommend as mentors?
there's a so I'll answer your first question. I am not currently doing mentorship right now. I'm so busy with this premium Discord that we've been building, and it's grown so fast. So it has all my attention right now.
Mm-hmm.
The mentorship stuff I did was like, it was only 2 months, and it was like selling out within a couple minutes. And honestly, it's a lot for me mentally to be doing both of them. So I don't know if I'm going to do it again. I know I will do it again, but it will be like very, very small group of people. With that being said, there's a lot of really good traders out there, man. I just know a lot of them don't offer the mentorship side of it, because it is really, really mentally straining to be
Mm-hmm.
teaching people like, think about this, man. I'm trading, 200 people in a premium, and then I'm answering questions, doing trade reviews, making content, doing all the stuff that's mentally exhausts
Yeah,
you, and then
that's a lot.
and then having to teach somebody for an hour and a half. Like, it's a lot. So there's going to be a time where I'll do it again, but a lot of these people just don't really offer it, man, because it is a lot. So the best thing I could say for you, man, is to get into a community and watch somebody trade. Like, that's why I think is really gonna benefit you. That's what benefited me.
Mm-hmm.
Like, in the beginning of my career in 2016, I just threw money at the market, right? I
Yeah.
just literally threw money. That was not the best way to do it. I did not invest in my education. I did not invest in a mentor, a community, nothing. I'm like, oh, I could do this. Threw money, got torched, right? The market was my teacher, basically. And then I said, I got to stop messing around. And I focused on education. I got into communities. I got into groups. I basically watched somebody trade every day. And that really grew me, and then was able to basically take what I'm doing now, develop the models, and then kind of tweak it to my liking. So, my best recommendation is, if you like what you see from me, then obviously watch all the stuff that I post, because it's a lot of stuff in there, and it's a lot of free value. People charge a lot of money for this stuff, and I just put it out there for free. So And then go on YouTube, man. There's just tons of great traders on YouTube too. You'll find some good stuff.
Because yeah, to be honest, I'm surprised I even got in. I just pressed the request button, thinking like there's gonna be a bunch of people like in a queue, because like complete novice, and I'm just starting my journey. I'm just trying to figure out the most effective and efficient path to take to get to the ultimate end goal to become a profitable trader.
Well, I'll tell you one thing, man. You're way ahead of me, because in 2016 we didn't have any of this stuff, man. I didn't have live Q&As. I couldn't get on here and talk to a trader that's been doing it for 9 years. Like, this is like a lot of value now. So it's, in my opinion, there's no better time to become a trader. Like, if you can navigate this market, which is one of the craziest markets that we've ever seen, you can navigate a smooth sailing market. So I wish you the best in your journey, bro. And I appreciate you being a part of the community.
So sorry, one last little quick question. So would you say at this period of time, with what's going on economically and politically globally, is this a good time to get into trading?
I think that this is it's a very difficult time to navigate the waters. I think it's a great time to start learning how to trade, because when things do cool off, it's going to be a lot easier to navigate. I mean, right now we're dealing with tariff wars. We're dealing with all types of stuff, and the market jumps 4,000 points in one day. You got to really know what you're doing in this market. You got to be a professional to navigate it. So I would never say like, hey, don't start learning now. I would say start learning now. And, you know, it could take you 6 months, years, 2 years, 3 years, 4 years. Like, doesn't, you know, everyone's different to actually understand it.
Yeah. All right, man. Well, I really appreciate your time and appreciate the advice.
Thank you, Cody. Have a great day, buddy.
You too.
Yeah, Chad, I just want to kind of follow up on that question that Cody asked me here. Is a good time to start learning how to trade? I'm a true believer that in life, there's no perfect time for anybody, right? God is the only one that's going to be able to determine that. I'm not going to be able to determine that for my own life. Only He is, right? So if you want to do something and you're passionate about it, you got to go for it now. The stars are never going to align perfectly for you. You have to start now and then let the rest happen just naturally, right? There's never going to be a perfect time to do anything. If you want to learn something, learn it, go all in, and you know, just keep working at it. Do we have a mod in here that can ban this guy, Paul? He's been literally saying just nonsense the entire time, saying fake, and you have the same name as me, bro. I wanted to be cool with you. We have the same name, but you're not it, bro. I think it's time to get this guy out of here. Oh, man. I got more people that want to come on, so hold on a second here, guys. We've got a massive list here. There's a girl here. Let's get a woman's perspective of what's going on. Hello.
Hi.
Hey, how are you? What's your name?
Fossey.
Oh, Fossey. Nice to meet you. My name is PJ. What's going on today?
Nice to meet you too. How you doing? You okay?
I'm doing well.
Good. Well, my question is, so I'm trading funded accounts at the moment. I'm currently funded with FTMO. I'm funding 200K with them, and then I'm also funded with Goat Funded Trader as well with 100K, so 300K in total. Okay. But I was just thinking that, so I'm obviously in the UK. Yeah. So we still have like the US. I see how it all got banned in like the US and everything like that. So I was just wondering, do you think that futures is also like a good move for me to try to start getting into? I've only really done FX at the moment, but I'm thinking about trying futures as well. But I just wanted some advice on that.
So it's a good question, honestly. There's a lot of people that are on the fence between Forex and futures. I started in Forex actually, and then transitioned into futures. So if you already are trading Forex, the transition into futures will be pretty easy. The benefits for me specifically is one, obviously, like you just said, it's regulated in the United States. So you don't have to really worry about, you know, there being issues with it. Two, there's zero spreads. You know, in Forex, you enter a position and you're already in drawdown. In futures, there's no spreads, and there's extremely low fees as well. So I would always recommend looking into it and getting comfortable with it. If you are trading FX, I mean, you could basically trade the Nasdaq and the S&P 500 already, but it would just be through a CFD instead of actually being through a contract, which is what we trade in the United States.
So you think it's worth looking into then?
Oh, 100%. I mean, yeah, I think it's one of the best markets in the world to trade. What are you specifically trading right now in Forex? What's your pair, or what are you trading? Commodities?
So I trade GJ and I trade gold as well.
Oh, GJ, the dragon. They call it the dragon. Okay, wow, you're trading two of the most difficult assets to trade.
I like the volatility with it.
Yeah, those are two of the hardest.
Yeah, I like the volatility.
Yeah. Okay, well, listen, if you like volatility, girl, you should come over and see what Nasdaq's all about. Nasdaq is insane volatility.
Oh my gosh, I've been looking at it the past week just with kind of everything going on with the tariffs, and it's kind of scaring me a bit. I think I might just stay away a little bit for now. But maybe later on, I think I'll definitely give it a try.
No, so if you're trading GJ, you're trading gold, you'll have no problem trading the Nasdaq and the S&P. But the transition just to learning how to place orders with contracts versus placing orders with what do they call an FX again when you take an order? A lot size, right? So it's a little bit different. There's some things that are a little different, but not a big learning curve. I think you would transition just fine, but I would definitely start looking into it if you're, if you want to trade another market.
Okay, perfect. Well, thank you for taking the time to answer my question. I really appreciate it.
All right, Fossey, have a great day.
You too. Bye.
Bye. Yeah, so chat, if you guys are like on the fence between like FX and futures, they both have a lot of similarities between them, but I think there's a lot more benefits for futures if you're in the United States. Well, there's some tax benefits too, but I'm not going to go into that stuff on this live stream. So once it inverses, we enter through the bearish for bag gap. I don't know what you're talking about, bro. This is a bullish breaker right here. A bullish breaker. So this is a bullish breaker, guys. Back to what we were a little teaching here earlier. So this was a trade that we took on Friday with the group. This went about 100 something points. And then as you can see, it retests the breaker. Watch this retest the breaker, right? So here is where the FEG aligns. Okay. There's that retouch, okay, from earlier in the session that didn't get filled. Right? There's that retouch. Okay. And then you would have taken an entry back inside of this gap here. So here's entry number 2 on this model. And then you could target that data wick high, which is relatively equal. Is that blue line I have marked out? And this trade ends up delivering a bag, 246 points. Big trade. Big trade. What do I think about crypto futures? I have no idea about it, man. I really don't. I've never traded it, never looked into it. Something that you guys really should start doing immediately in your careers is you should focus on one asset, one thing, and you should become a professional at that one thing. You shouldn't be spreading yourself thin, trying to trade GJ, EU, gold, Nasdaq, S&P 500. You need to trade one thing. For me, I trade the Nasdaq and the S&P 500. That's two indices. Most of my trades are executed. I would say 95% of my trades are executed on NQ, and the other 5% is executed on ES. So you need to become a master of one. Okay, a master of one. You don't want to just be someone who's subpar at many things. Just become a master of one. Oh, dude, Charlie, it's a great question. I'm currently sized way the heck down, bro. I'm literally running 1 to 3 micros, and we are making like really good money. You don't even need more than that. Nobody should be trading minis in this market. You'll get absolutely torched. The V-shaped prints for me. Awesome, man. Can you go over some short trades? Yeah, sure. I have one set up over here that I really like. I always talk about this model. This 5 minute. This 5 minute. Oh. Yeah, trust me, guys. You don't need more than that, man. I would be running. Everyone should be running micros right now. If you want to stay alive, you need to be running micros. If you want to get torched on a Trump Drake candle. So this is one of my favorite setups. This is not going to be a breaker though. We're going to talk about an inverted fair value gap model on this idea here. So as you can see, well, let me not say as you can see. If you're a complete beginner, you have no idea what I'm talking about. So let me start over. Okay, I've got some things marked out here. We'll talk about it. First, guys, the number one thing that we're always looking for is a manipulation leg. Okay, you guys see how this market comes up and manipulates above this swing high? This is going to be our manipulation leg. Okay, so you put in a high, a low, a higher high. Okay, now this is the manipulation leg. Whoops. What I want to also notate here is that when we do trade the inverted fair value gap model, which is very often, when this market starts to deliver out of a higher time frame PD array, you see this bearish fair value gap to the left? This is a bearish 5-minute FVG. You see how we're in here and we're starting to reject the CE of that gap? Okay? That is giving me it's giving me basically confluence that this trade is going to now reverse from this bearish gap. Okay? We filled it to CE of it. We manipulated inside of it. We swept liquidity, and now we're V-shaped recovering and reversing here. Okay? Now, this is the key element of the inverted fair value gap model. On the leg up, remember this manipulation leg here, guys? On the way up, you're looking for a fair value gap on the leg. This is going to be our 5-minute fair value gap on that leg. Okay? There's your 5-minute fair value gap. What you're waiting for with this model is an inverse of the gap. You're waiting for a candle closure below the bullish 5-minute gap. Okay, so watch. Here it goes. Boom. This is now a 5-minute inverse. Okay, so we took a bullish gap and we flipped it to the downside after V-shape recovering, sweeping liquidity out of a higher time frame PD array. Remember, there's a gap over here to the left. Okay. Now, how do we trade this model, chat? Who's been paying attention? What are we doing here? It's going up, so we buy. Okay, you definitely failed the test. Everyone else has been paying attention. Thank you guys so much. Okay, so now we inverse the gap. There's 2 ways to trade this model too, guys. I always say this, 2 ways to trade it. You got to figure out what kind of trader you are. You're a retest of the inverted fair value gap trader, or do you want to take the break? Okay, so option number 1 is going to be on the break. So here's a candle closure below. Right? You're shorting here. Stop loss is going to be above this gap here. People are going to be like, why, Paul? Why? Why above? Why isn't it above the inversion here, guys? Why is it not here? Why does it have to be here? Okay, let me show you why. You see this bearish fair value gap resting here? The market has every right to come back into this bearish gap, tap it, and go lower. So you got to run your stop above that bearish gap because that bearish gap is valid and it's inside of the inversion. Okay, so here we go. Now, like I said, option number 1 is going to be that you could take a short here. Stop's going to be above the bearish. TP is going to be down at Asia lows. That's going to be completely valid. It's a completely valid trade setup if you want to take it this way. Okay, boom. There's the Asia lows. There's full TP right there. Okay. No CISD is needed in this model. Okay, that's the first way to trade it. Option number 2, which is going to give you a better RR, is going to be the retest of the inversion. Stops in the same position. TP can be at London low for a 1.245, back to Asia low for 1 to 5. That's going to be option number 2. Boom, displaces. Now, if you start visualizing this and you get your pattern recognition starts getting better and better, you're going to notice that all of the inverse fair value gap models all look basically the same. They're going to look like that. Okay? So that is how you trade it. And the liquidity pools are the stuff that the stuff that really you guys should start understanding by now. There's London low, there's Asia low. That is our liquidity pools for this trade. Somebody asked, where's the liquidity? London lows number 1, Asia lows number 2. We have easy draws on liquidity lower. We have our inverse fair value gap set up here. We've got a V-shaped recovery out of a higher time frame bearish gap. Okay. Inverse, retest, rock and roll towards Asia. All right. I don't know why this guy keeps promoting TJR in my stream. When's the last time you've seen TJR go live on TikTok and do exactly what I'm doing? TJR is TJR, but I'm myself. Let's stop comparing, okay? He has a different audience than I have. 30 plus years in the market. This guy is actually teaching. Yeah, man. I've been doing it for 9 years. 30 years is crazy, man. Welcome into the stream. I appreciate that. All right, let's bring some people on for questions about this or questions about trading overall. I've got 5 people that want to get in here. If you guys want to request to come on the show, just request right now, and I'll bring you in here. Let's get this guy William in here. I think he's been waiting. I've not been trading ICT for 9 years, brother. I've been trading for 9 years overall. I've been trading ICT for about 4.5. Like, what do I have to prove to you guys? Like, I don't understand some of your questions. All right, this guy's not connecting. Let's get some new people in here. Am I funded? Yes, I'm funded with every firm. Let's get this guy in here. Hey. Hello. Lazino.
Yeah, you can hear me there, right?
Yeah, how are you, man?
I'm all right, man. I'm all right. I'm liking how you're actually going into in depth about analyzing these break-off structures and specifically knowing where to draw your lines, to know where to put your entry and where your take profits will go. And I like the fact that you actually mentioned that would be a because that's a long trade, isn't it?
You're saying this is a long trade, meaning what's your question exactly?
Your entry, your take profit, where is it going? Is it a long trade or is it a down trade or a short trade?
This is a short, yeah.
Okay. May I ask, is the market in that specific market, is it not consideration? So is it not all in a range, or is it specifically an uptrend market or is it a downtrend? Because I didn't see what you was doing before that to analyze the trend of the market.
Oh, you're talking about this specific trade idea?
Yeah.
Okay, so this is a downtrend market right now.
Nice,
And we
okay.
were basically just pulling back into a higher time frame PD array, which is this 5-minute gap over here, and then we're just looking for lower. So that's why we have London low,
What-
Asia low before that, and then even below that we have New York PM lows, and then New York AM low way down here.
And what time frame do you start with analyzing where you put your break of structure and all your key zones? What time frame do you do that specifically on?
My key
There's people that
zones.
say you could do on 15 or you can do on 30 minutes or and that won't make any differences. But I've always seen there's small little differences that where your key zones shouldn't be.
So wherever Asia high and London low and Asia low is, it doesn't matter what time frame you mark it on. You just have to find where those specific overnight highs and lows are resting. So like if Asia low is let's say Asia high is right here at 7:05, we're just marking it out. You can mark it out on a 1 minute time frame, but that's the actual high of the session. Then here's the low of the session at 3 in the morning for London lows. That's where we mark it, etc., etc. It's easier to do it probably on the 15-minute because you could see more to mark it out quickly.
Yeah.
But overall, I mean, you need to know where these liquidity pools are resting.
Amazing.
Because you can see how it gives you guidance too. Like if you don't have this stuff on your chart, then you're kind of trading blind. I always say, without having a liquidity pool.
Fibonacci retracement, isn't it?
What's that?
It's very similar. It's like a Fibonacci, what do you call it, a retracement, isn't it? Because like where your zones all at the moment, you've got more than a couple more zones, and then if you change that to a Fibonacci retracement, would you be still able to get the exact key zones that you've pointed out right now?
I have no idea.
I use that sometimes.
I don't use Fibonacci retracements. I just use,
cool. So you don't use that at all? Oh, okay.
Yeah, I mean, I use OTEs sometimes, which is part of the Fibonacci retracement, but I don't really use it. I use a standard deviation tool to figure out where my targets are going to be. But no, I don't really set up Fibonacci retracements anymore.
Oh, okay. I've just like, let's just say I've market analyzed my trade at the moment on my chart for gold. I know it doesn't start till Sunday night for me in the UK, you see. So what I've done, I don't know if you can, is this, what market is this? Or is this futures, is it?
Yeah, this is the NASDAQ.
Oh, okay. So yeah, I've just put up all my what do you call it, my strategy within the technical and analysis in my gold, and it's pretty much similar to what you've just done right now. I think I might have messed it up where the manipulation might be at.
Okay. Hello? Yeah, I'm not
understanding. Hear me there now?
Yeah, I'm not understanding what you're asking me, to be honest with you, brother. If you have a specific question about the model, I can answer it.
Yeah, the model. What model is this?
This is the inverted fair value gap model.
Inverted gap. Okay. And does it work with Forex, or is it just specifically on futures?
I don't really know, man. I don't trade Forex. I just trade NASDAQ. It works the best on NASDAQ and the S&P 500. I think you could trade it with like Euro USD maybe, but I'm not sure.
So when you trade with futures on NASDAQ and all these trades, do you do this every day, or is it specific days that you can't trade on because the market might move against you at times?
No, man. I could, if the setup presents itself on the chart, then there's a model, there's a draw on liquidity, then we take the trade.
Oh, okay, makes sense.
All right, bro. I appreciate it, man. Brother. We're gonna bring somebody else on now. Thank you.
All right, no worries.
Okay. So who wants to go on? Come on next. PJ, why do we mark out the 9:30 open and midnight open? Why is it important? The 8:30 opening and the midnight opening price are going to give you guidance for the day. If we're trading above midnight and 8:30 at the 9:30 bell, there's a high likelihood the market wants to go higher for the day and we're in a premium. If we're trading below the 8:30 and the midnight opening price at 9:30 bell, there's a high likelihood the market wants to go lower for the day and we're probably in a discount of the range. All right, let me bring somebody else on. Guys, if you have specific questions about what we're doing here, please, let's keep it limited because I don't really know what that guy was even asking me. This guy has questions. This guy wants. Hello.
How's it going?
Hey, how are you, man?
Good. I just had a couple questions on the other model, the breaker model.
Okay.
We could go back to that.
Yeah, 1 sec. Where was it? All right, yeah, I'm here.
So, like, can you go to the first trade that you took?
Yep.
I know you explained like the pros and the cons of it, of like where to enter, but I was wondering, like, obviously you have the fair value gap, it could retest there, and you can enter there,
Mhm.
or you could enter right when it retests the breaker.
Yep.
Like, when you're in real time, like, how are you actually deciding when to enter there? Like,
Well, it's not about it's about risk, man. It's about the risk. So if you're deciding that you're gonna take the trade based on the breaker actually forming, like let's say for example you're taking it here, you could trade either way of trading this is normal. It just depends on how you want to trade it. There's no like one way is right, one way is wrong. It's what's your risk, how you're defining it, okay? And then just taking the model, because we know the model has, you have to look at this as a probabilities thing, right? We know the model has a very high strike rate. I don't want to say specifics because TikTok doesn't like that, but it has a high strike rate. Okay. So what I'm doing is, and I'm just figuring out, hey, you know, what's my risk going to be on this trade? How many micros or minis am I entering? I'm setting it and I'm basically forgetting it.
yeah.
So if you want to trade it based on it coming back into the FEG, that's just totally based on the trader. Like it doesn't matter. You're both ways of doing this are right. You enter on the break of the breaker, or you enter on the retest of the fair value gap. There's no wrong way of doing it.
Okay. And then, sorry, I should have asked this question when you were on the other model, but do you mind going back to the other model? I had a question on that one too.
Yeah, 1 sec. Okay.
So here, like, I mean, I trade ES, but and I missed my entry yesterday, which like pissed me off, but like, it's whatever. I just had a question on, like, obviously you're looking for that fair value gap, that bullish fair value gap on the way up, right?
Yep.
What, like, how do you know which one to go off? Like, in that case, there's only one there. Like, what if there's multiple fair value gaps on the way up? How do you know which one to go off of?
That's the question. That's the question everybody wants answered. So I have a premium Discord and I made a whole video on this, but you're going to go for the first presented fair value gap on the leg.
Okay.
So if there's two, think about the first presented fair value gap on the leg. That's going to be the last line of defense, right? So let's say that this is see how this is the first presented and there's no others. Let's say there was one up here. I wouldn't be interested in that one. I'm interested in the last line of defense on the manipulation leg.
Okay. Like, sometimes there's like multiple though, like 3 or 4, right?
Good question, right, chat? Good question.
No, is it even worth, like,
good question.
Let's say there's like 4 of them. Like, is it even worth like trying to wait for that inversion of the 4th one and taking a trade there? Even if it's
I mean, to be honest with you, bro, there's rarely have I seen 4 FEGs on a manipulation leg. If there's 4 FEGs, that might not be the manipulation leg. I mean, the most that you're usually going to see are like 2. Because remember, if you're not getting a V-shaped recovery out of there and it's creating more fair value gaps on the way up, there's probably an issue.
Yeah.
Like, yeah, I don't normally see 4. I normally see like 1 or 2 on the leg.
I see.
And even if there was 4, I don't know, it'd be a little sketchy for me because that means that we're not reversing quick enough and it's creating too many gaps.
All right. Okay. I had one more question. I forgot what it was, but just for, like, I know you say like evals, you want to be aggressive and stuff. I just passed my eval. I'm on the funded and I'm doing You think 4 micros is too much or not? Or not? Even size down from that. I did 4 micros, but
you're on eval.
yeah, top step. Yeah. Well, no, I'm on the. I just passed the eval. I'm on the funded now. So I saw like I did minis before. Now I'm on 4 micros, but like I don't even know if that's too much or not. But I'm on ES.
I mean, right. Oh, you're on ES. I mean, right now, dude, on ES, you could do anywhere between 1 to 5. I mean, how many? What a size account was it?
It's a 50K.
Yeah, I mean that's fine. 1 to 5, 5 being the absolute max. My rule of thumb is basically this: if you have $500, so for every $500 worth of draw, you're going to be using 1 micro. So if you have $1,000 worth of draw, you use 2 micros. If you have $1,500 worth of draw, you use 3 micros. You know, et cetera, et cetera, et cetera. And you just keep building up, and then you can add a micro for every $500 of draw you add to the account.
I see. Okay, and then one last question is like, let's say you're looking at a fair value gap and it inverses it multiple times. Is that still valid, that fair value gap?
If
like later on or not?
If you're looking at a fair value gap and it inverses it multiple times, what do you mean? Like it flips it and then goes back up and flips it again?
Yeah, like let's say if you're looking here at that bullish fair value gap, like let's say on the retest it just went through, inverse that one, inverse it again, and then the
more that we mess around and we start doing stuff like that, the lower probability the setup ends up becoming. So I would start probably getting a little hesitant on using the inversion there. If it inverts and then comes back up, like you don't want to see that.
Yeah. Okay.
All right, brother. Those are some good questions, man. I appreciate the questions.
Yeah. Thank you.
Thank you, bro.
I love the videos. So
appreciate it, buddy. Thank you, man. Yeah, so what he's talking about, guys, is inversing and coming back up and then coming back down. Like that is a low probability trade setup at that point. It's high resistance liquidity. It's choppy. It's indecisive. I would avoid that. You want see how this is V-shaping out and then displacing aggressively and then displacing away from the gap. You don't want this to come down, flip, come down. Like this is sideways then. Ugly, you know? Ugly, ugly, ugly. Guys, I just want to quickly I just want to quickly plug my main account. If you guys are not following my main page, it's at PJ Trades. This is my alt account that we're on today streaming because I have to be on this account today. But if you guys want to follow me on my main page, it's PJ Trades. Also, we have a free Discord channel. Just the link's in the bio on this page. Just go to the free Discord, join the Discord. We'd love to have you guys in there. You guys can see what the community is all about and make a decision if you actually want to trade with me live or not. But that's no pressure. I really don't care what you do. I don't really care what you do, brother. So do you trade during kill zones only? Yes. So guys, very, very, very important, right? Let me show you something. Well, let me just explain it, I guess. I am only looking. I'm just going to type this out. It's probably easier. So this is the kill zone, right? For me, I am trading between 9:30 a.m. and about 11:30. That's going to be your New York kill zone time. All right, this is New York kill zone. Okay, that's the AM. So let me change it up. This is AM New York kill zone. Okay, there's also a New York PM kill zone. I don't trade this one. It's very rare if I do, unless there's an absolute freebie for us. But this is 1:30 to about 3:30 Eastern Standard. Everything's New York time. Okay, so we have New York AM and we have New York PM kill zone. There is also a London session and a Asia session. I do not trade those. Anyway, it is. Sorry, someone actually said it is actually 8:30. I don't trade 8:30, so I just mark it as I'm 9:30. I'm never on the charts before 9:30. I do not trade pre-AM New York. So my specific session is 9:30. But if we're talking about when the actual kill zone begins, it's 8:30 in the morning. Okay? So yeah, you can trade pre-market. I don't really like it, so I just trade 9:30. Okay, so these are the two major kill zones. Why are you that old? What? Yo, Miguel, what's up, man? Why don't you trade pre-market? Because there's more volume during my kill zone. Pre-market, there's really not enough. I like volume. I like swift movements. A30 to about 9:30 is pretty slow. I mean, the market's really not even open. This market's not open yet. Isn't it until 12 p.m.? I'm giving you guys what I do. I don't like trading anywhere near lunch. So I'm usually trying to get out of the market before noon. So I like to be done by 11:30. Favorite days of the week to trade? Tuesday, Wednesday, Thursday, Friday. Specifically, my favorite days are probably Wednesday and Thursdays. This is EST, guys. Everything's EST, guys. EST. Everything's New York time zones. You have to be in line with what the New York stock market's doing. Okay? Again, if you guys want to follow my main page, follow at PJ Trades. Okay? This is my main account on TikTok. We also have a free Discord. The link's in bio on either of these pages. I'm going to call it there, guys. We've had an hour and 20 minutes of just tons of Q&A. A lot of people got on. Does anybody want to get on? Maybe one more person before I call it? Is there somebody in here that actually really has some good questions? Otherwise, we out. I think I'm going to call it actually, guys, because you know what? I'm pushing my luck, and I've been literally shut down on this platform like maybe 4 out of 5 times. So I think we should just call it. Let the algorithm know that we were peaceful today and nothing bad happened. We can download the stream and we can repurpose it. So I think we're going to call it here. We've had some bad luck with TikTok with these educational streams. I don't know. But anyway. All right, guys. I'm going to hop off. I hope to see you guys over in the Discord channel. And we will see you guys on Monday, whoever's in the premium group, man. Have a great weekend, guys. Stay blessed.